Yo, what's good everybody? Episode 3 of the time frame alignment model. We're going to be talking about order pairing, and trust me, this episode you want to watch it from start to finish because there's a lot of gems here and it will turn unprofitable traders to profitable traders. So make sure to watch every second of this video and we'll recap last week's homework as well at the end. So let's go to the syllabus. We've got open high low close, open low high close, first episode, and liquidity pools, the second one. Links are in the description if you haven't watched it. It will be a playlist as well, and this week we're going to be talking about order pairing. So why is order pairing so important? Knowing where the market will go is often the most difficult part for most traders, and with this order pairing concept I will break down step by step how to incorporate those liquidity pools we talked about last episode and then find the highest probability trade setups. I will show some examples from callouts I did without hindsight as well. So these are the topics we're going to cover. We're going to be talking about the core concept, which is order pairing. Then we're going to be talking about ranges, and we're going to be talking about key levels. And then at the end, I will do a simulation session, not for entries per se, but to show you where to look for these highs and lows in the marketplace for good order pairing. Now let's talk about core concept first, right? The order pairing, the market only moves from buy stops to sell stops and from sell stops to buy stops. Now to identify these stops, you have to think about the previous episode, right? We talked about external range and liquidity. This is going to be the main focus. So you're going to be looking for an obvious high where those buy stops rest above and an obvious low where the sell stops rest below. Order flow, also important. When you are bearish, you'll be looking to order pair the buy stops above an old high, and then you pair that off with a range low, and vice versa. When you're bullish, you'll be looking to order pair those sell stops below the range towards the buy stops above the range. First of all, let's talk ranges. So I got a crude schematic over here, right? Discount level, premium level. Now we're going to be focusing on the smaller range within a bigger range. This is going to be key into your understanding on where to enter in the marketplace. You always hear people say you want to be a seller in premium and a buyer in discount. Now, if you use this order pairing technique, you'll be buying in the correct premium area because you're pairing up buy stops above a range with sell stops below it. Here's a little call out I did from 14th of January in the Discord, right? This was my draw on liquidity, order pair those highs, right? This was the range we're using. And then in the end, you can see the result over here. And we're going to be actually breaking down this entire trade setup. So over here, we've got a blank chart, the US dollar index, the 1 hour chart, and just try to figure out where the ranges are, where you can see obvious highs and lows. So if I mark out premium and discount first, that's important, right? Because we always want to be a seller in premium and we want to be a buyer in discount. If we don't know our range, our premium discount range, then we don't know where to sell or where to order pair. Now, if you spotted this one, right, we have buy stops above this high and sell stops below this low. This is an NFP candle, so this is a data range, news release data range. We can see the buy stops got rated above it and it wants to pair it up with the sell stops below. That is classic order pairing. Now, how do you actually find a setup once this buy side liquidity rate happens? We're going to be focusing on a smaller range. I want to get your attention to this area over here and this low, right? Can you spot a high and low over here? And then in the same schematic I sent in earlier, right, that I showed you from range high to range low, you can see the same thing happen over here. You have a range high over here because there's a swing high and a range low, and this is swing low, right? And then you can see the accumulation of buy stops above the range high, and then we want to order pair it with the range low. So same thing that happens over here on this high, right? It happens on the low, but in a smaller range within the bigger range, you can do the same thing. And this is what makes a high probability setup. There needs to be a key level above the range high as well. You can see a fair value gap over here and an order block, right? So this is a very good premium level to short from. If you don't want to miss any episodes, make sure to hit that subscribe button. Let's talk about buys, right? We had a sell example. For buys, we want to pair up the sell stops below a low and pair them up with the buy stops above a high. Same thing, we have a premium and discount range, but we want to work with a smaller range within a bigger range. This is going to be key. You want to see that key level in discount and order pair it with a smaller range. Another call out, right? There's no hindsight. Everything has been called out before. It's all in my Discord for my exclusive members. Now you can see I want to order pair this low and want to see price go higher here, right? So always buy below an old low. There's a bigger range here and a smaller range inside of it, right? And then the result was a very messy week, by the way, but eventually we took out the low here and order paired it with the high over here, right? So it still worked out. Now, Didn't fully complete the market maker buy model as I was hoping for, but the concept on order pairing low to high within the range was perfect here. So over here we've got a US dollar index chart, right? Already marked out the premium and discount on the range. Again, watch this chart. Can you spot those range high and range low and where you want to see those order pairing happen? I'll go to the next one, right? Over range low to range high. You want to order pair the lows to the highs, right? This is important. And what is even more important, it is a smaller range within a bigger range. And that is something you really need to put in your mind and remember. If you watch the charts, you will always want to see a smaller range within a bigger range. Now over here, we've got accumulation of the sell stops, right? Because we took out that low and now we want to pair them up with the range high. And you can see it's slightly took out the high over here, but still order pairing occurred. And that's the most important part of this concept. Another example over here, right? This was a buy limit I sent in to my exclusive group. We had a breaker, right? And then again, smaller range within a bigger range, right? We're gonna break this down as well. Result, full TP hit. So I did not take this trade because Trump was speaking. So the economic calendar had something to do with me not executing. But if it was a regular day, I would have taken this trade. And it's all about the technique of order pairing. So let's break this one down, right? EuroCAD, 1 hour chart. Where is the premium and discount of the range? We've got an entire range over here, right? Obvious high, obvious low. So we have this entire range. Now what we want to do, we want to find a smaller range within the bigger range, right? And this is where we're going to do order pairing. We've got buy stops above over here. So we want to liquidate those highs. Then we've got our key levels. Key level is the breaker and the fair value gap. And above that key level, we have that engineered sell side liquidity, right? So the sell stops that are resting just before the key level, this is going to be key. You will always want to combine your liquidity and a key level below or above it. So now if I mark out the ranges, it becomes a lot clearer, right? We've got this range low down here to order pair it with the range high above here. So we have a smaller range within the bigger range and eventually TP hit, right? Over here from low to high. And that is the entire trade setup. It sounds simple, but you really gotta look for those smaller ranges within the bigger ranges. So over here, we've got a GBP JPY chart. Same thing, right? We're gonna do a blank chart first. You're gonna spot on the chart where you think the obvious highs and lows are. And then I'm gonna break it down for you. So let's go to premium and discount. First of all, right? We have an obvious high above here and an obvious low below here. Now, is there a smaller range within the bigger range where we can order pair? Obviously, right? That's what we're looking for. We're looking for this high over here, which is resting in premium, and the low down here. And we want to order pair this specific range. It's a smaller range within a bigger range. And I keep repeating it, but this is so important when you order pair to use a smaller range within a bigger range. We can see the key level, which is above it, right? So think about the sequence you're doing, right? Premium and discount, smaller range within a bigger range. Is there a key level above those buy stops, above the range high? If yes, this is a very good area for a short, right? So you can see that over here, key level got hit and you see it accumulates the buy stops above it and then pairs them off with the range low. And just for annotation's sake, we can see that over here, right? Accumulated buy stops and then order pairing the sell stops. Let's recap the homework. This was the homework from last episode. I marked out the range we're trading with and we had a smaller range within the bigger range. So if you marked out this on your chart from last week, you are on the correct path. And if you didn't, this episode should help you determine it for the next one. So right now we're going to go into a simulation session. I'm going to do a few examples. I'll pick a random date, see if I can order pair some highs and lows. And then you can see my entire thought process on where to pick these highs and lows. Right, so first of all, let's pick a random date. We got 1st of May 2023. Let's see. 1st of May 2023. Let's scroll over here so I know where it is. I already put TradingView back. I don't use my FX replay anymore. It looks absolutely terrible right now. So I'm just going to use TradingView. And I put it all the way back over here already so I can know what the structure is before. So let's go here. See where we end up. Right. Okay, so let's do a top-down analysis. We want to know what is the order flow, right? Otherwise we don't know if we want to pair up buy stops with sell stops or sell stops with buy stops, because you don't want to trade against order flow. We did not take out this high yet, so I'm still going to be bullish here. Order flow should remain bullish. Where do we want to buy? We want to buy below an old low. These lows probably going to stay intact, otherwise we would already ran it so many times. It retested this order block. Don't think it will come back there. Let's go to the 4 hour. Right. And it is a Monday and we want to see higher price. So where do we want to be a buyer? On the minimum, you want to see this logo and pair it up with the high here. So what I would do is say we want to take out this low here and the low next to it as well, because this is low resistance lows. And then we want to order pair the lows to the highs. That's look like a probable scenario to me. So let's see if we can do that. All right, we take out the low, see if we can expand higher. Okay, that's example number 1. This looks, it looks easy, but this is something you need to train. And if you can spot it, you can find those high probability setups very easy. So this is example number 1. See if we can get another one, because we're in bullish order flow. And I want to look for sell stop rates to pair them up with the buys until the order flow flips, or obviously. So let's go to the 1 hour. We can find maybe a 1 hour example as well. Yeah, we can do that because we're in bullish order flow. So we're going to mark out the range, right? We already had one example. We've got a nice range over here and we see a swing low within that range. Now, why am I picking this one? If I go back to the 4 hour, that's the low of this down close candle, and that one should not get violated, right? It's formed in an opposing array. So if it retraces lower, you don't want to see it violate this area down here. That's why I'm picking this 1 hour range. There is a short-term low here and a fair value gap with a little bit of balanced range already, but that's fine. So what I would do for our second example, I would look for buys below this low, right? So now we have an order pairing range low to high again. So see if we can get there on the 1 hour. So we're flipping time frames right now. Right, we are already rating the highs, so probably we're not going to go here, but same thing, or same thing with the order flow. We want to be bullish, right? So this is why we keep continuously looking for lows to get rated and then look for buy opportunities. I would miss a trade here completely. There's nothing there for me to take. So let's go back to the 4 hour, see what's going on over here. And the daily, we still haven't reached that buy side liquidity, so we should remain bullish still. We're working with this same range still on the 1 hour. And with this down close candle, so technically there's no swing low here, but because we shouldn't violate this down close candle, we can actually pick a range from here. Granted, it's also a swing low on the 1 hour, and on the 1 hour we don't see this high for some reason. But the same thing I would do over here. We've got this low. If we form a swing high up here, I want to see it go into this fair value gap or this order block and then continue up. So I would do something like this, right? So I would wait for something like this. See if we can do that. Let's scroll ahead. We did not, but same thing. This could be SMT, right? So I already got like 3 different scenarios where I can almost find the exact low where it will order pair to the high. Just we don't have information if this is SMT. If this was SMT, this is still valid, and then the previous one as well. But I can't see it because I can split the screen, I think. I'm not sure if I can. Right, I'll try to find one more. Drawn liquidity has been hit already, so I don't really like that. We can actually do a deeper retracement probably. Let's see how structure develops. I want to see how structure develops first after we hit that key level. That's old high, right? Right, so we're starting to trade lower. Still not seeing anything. All right, so we're going into sell side of the curve here, right? Now, if I go to the daily, yes, now I want to see us go for all these lows down here, right? So now it's a little bit easier to look for a buy stop to sell stop scenario. I don't see a swing high yet where I want to order pair, so I gotta wait for more information. Right, this is going way deep, by the way. This high probably won't get order paired because there's no reason to go there. Let's go to the 1 hour. We can actually look for something. Let me look at the daily candles right here. Yeah, there's a daily fair value gap above here. Let me mark this one out. All right, let's make it orange. And yeah, that's exactly that high. Okay, so we can work with a bigger range over here right now. So let's take the 4 hour. Yeah, we can actually take this range here. If this bottoms out over here, We can technically take this range. This range is fine as well. It's just about the most important part is this high over here needs to get taken out, right? So we can use this high over here, and then the key level is above it, right? So think about the sequence, premium discount, buy stops, sell stops, and key levels. That's important. So what I will do is mark out something like this, and then continuation lower. So let's see if we can get that, and that would be the last example. Right, it tagged, yeah, tagged it, right? Yeah, it tagged it. Look over here. And these are just, I can pick these examples really fast because I wait for information to show me if these highs are actually quality and if there are actually key levels paired up with them as well. You can see the high got taken out over here. I've drawn out the correct range and the high gets order paired with the low. It sounds simple. You got to practice it a lot. So I hope you enjoyed this little simulation attached to the educational video. If you like the video, of course, as always, make sure to subscribe, right? And hit that like button. Hopefully this video will help a lot of you. And I will check you out in the next episode.